Tonight I'm going to discuss some of the price action that's been occurring in my primary market, which is the Bund. And we're discussing the Bund for the second session in a row. And before all you BTC traders and Nasdaq traders and all the rest of you start complaining that the Bund's too slow and what the fuck is the Bund anyway, everything that I show you applies to all the markets that I've ever traded. So let me go over some basics for the foundation of how I trade. We started out on Monday just discussing a potential area on the charts, which was this swing high. Now I color code levels, so let's do that now so it's easy to discern what kind of level it is on a lower time frame. I always use red for weekly. You can see that price came off this swing high and we've now had quite a decent rotation higher from here. If we drop from here straight to the H1, let's just remind ourselves what I discussed. I explained how I would normally, well ahead of price getting anywhere near this level, start preparing for a trade. So I went and looked at how price originally interacted with this level, and then I isolated what I call the LHPB. It's an acronym for last high pre-breakout, and that for me was here. So this minor swing high before we broke up on the hourly here, away through the weekly and closed above this last swing high. And I do those in green. So once I'd isolated that and I could see that it was just 4 ticks in front of where the swing high was on the weekly, then I explained how I came down to the 5-minute time frame and just went back to look at that level and how price traded there originally. And the purpose of me doing that is the 5-minute in Bund is my trigger time frame, and on my trigger time frame I want to check that the level I'm trading is still untested. So I will refer to levels that have been untested as a naked level. So it's essentially a level that no subsequent candle after the breakout has tested on my trigger time frame. When you look at this level, it's naked on the weekly. It's not naked on the daily. We'll talk more about that in a minute, but it is naked on the hourly and it is naked on the 5-minute. And I said what I would do in a situation like this is I would put in a bid at the level with a stop and target. And I said for stops I would use the thrust candle that opened below and closed through the level I'm bidding, and we'll talk more about a target shortly. It is possible that orders like this can get cancelled if I don't like the price action trading into them. Many times they aren't and I just wait for them to fill, but sometimes they can be. As we move through EFL, you'll see me put orders in and then I'll say I don't like the way price is moving into this, I might pull the order. So if we move forward and we have a look what happened back on Monday at this level right here, it comes into it, it trades off of it to the tick precision. So good, in fact, it's fucking useless because you can't get a fill. So you can stick that precision up your arse when only 9 hit the bid and you're left at the back of the queue not knowing whether you need a shit or a haircut. But it reacts and it starts to move higher. Now, I did say that it doesn't go and fill the open drive, which is this candle here. You see this 7 AM 5-minute candle? Which again, 76% of the time it will go and tag the open on the same day if there's an open drive. That actually made this move even trickier because as it comes off the level, you're anticipating it might go up there and it actually doesn't get that high. For those that are asking, I'll put this on a 30-minute chart to illustrate what the open drive is. Look at the 7 AM open in Bund. So you're looking at the 7 to 7:30 AM candle. This is specifically in Bund. So this is where the first 30-minute candle of the session has an open that's either the exact high or the exact low. You can see this candle has an open that is the exact high, and it doesn't trade even a tick higher before it moves to the downside. Now, again, when you see that occur on the open in Bund at 7 a.m., there is a 76% probability that it will get tested on the same day. And this is a phenomenon that's there in all markets, so please go away and look into it when you have some time, because there is real edge in being aware of it. But you'd have to look at it in relation to specific session opening times for the markets you're trading. When I refer to an open drive in Bunds, I'm referring to the old 7 a.m. open, which was before they went and fucking extended the hours. So the actual open in Bund is at 1:15 in the morning UK time, but I'm going off the 7 a.m. open. So if I see an open drive, I will usually try and fade it back to the open. Now, regardless of whether you got in or not down here or how you managed it, price turned here. Let's go back to a 5-minute chart. It was a little bit lackluster, but it certainly reacted to the level, moved higher before making one more low and then going on the next leg higher. So if you look at the hourly and you look at it for context, you can see there really was a very nice reaction, but the initial reaction was tick perfect. We trade slightly lower and then we go vertical off of here. Now, fast forward a couple of days and price has now traded all the way back and through the last low pre-break above, which is right here. So it's the very last area of support before price broke to the downside. Note how it swung away. It moved down, then it moved aggressively to the upside, left a long wick that week, traded down through the level, off of this swing high, and then up to that and through it. You want to get used to noting where these levels come in because they're pretty important to how I trade. Now, coming back to the hourly time frame here, your first question might be, well, if you knew it was going to react like that, why did you discuss on Monday how you would have planned a trade with just an 11 tick target? And if that wasn't your first question, it fucking well should be. Answer is, I didn't know it was going to make a move like this. Sometimes I will, and you'll see more examples of that in the rest of the month. But other times I don't know. I just know that it's very likely that a reaction will come in at the level because I've been watching these markets for years and years and years. And I know where the market is likely to go bid and where it's likely to go offered. So I didn't know how far we were going to go here, but I knew that was very, very likely to have a reaction. Now, in terms of the target for this initial trade, the reason that the target was so small is not knowing how far it would go. In examples like this, I will look for a reaction off the higher time frame level to the very first level above market that I think it will be tricky for price to get through. You will hear me refer to this in future as the FTA, which is an acronym for the first trouble area. The first trouble area here is this level on the hourly. And again, let me just color code it. And the reason for that level being important is not just the pullback low on this hourly, but it was a sticky point on the daily. If you have a look, it's not visible on this time frame, but it was at 36s, and the high of this day here was 36, and the low of this day here was 36 to the tick. So down on the hourly, that's a potentially sticky point. FTAs are really critical to me for profit taking. Many trades like this, I look for essentially a quick reaction on the first test. I'm treating it like my sex life when I was younger. Get in and out quickly and then brag about it to everyone else who didn't get any action. One of the reasons I like to get in and out relatively quickly at the FTA on the first test is that oftentimes, not always, but oftentimes the market fucks about a bit at a level. It washes it a little bit. So what you'll see here is you get that initial tick perfect reaction and then it drives down and it makes a new low. It takes out the stops from those that were long off the level And actually it traded into where we said the swing high was on the weekly. And if you go back to the weekly here, and I know I'm throwing a lot of things at you, it actually traded down into the VPOC from this week here. So if you're using a market profile chart, it traded down into the point that traded the most volume from this huge week here, and it turned off there very, very nicely. So that was waiting just underneath the level. Just so you can see exactly what I'm talking about. You can see on this breakout candle here, it was the VPOC, and it essentially traded right down into it, and then that was where we formed a low. Now, when you look at all this, you might start to see at this point how two people can trade a level very, very differently and have markedly different results. They can come up with the same analysis. I think there'll be a reaction from this level, but one might take a quick in out and then get back on the sidelines, maybe waiting for another trade. One might have just steamed in here at the level with a wider stop than I initially put in. They might account for the VPOC, put it lower than that, and sit back and look for a massive move, which in this example here they get rewarded for. It isn't for me to tell you how to trade these levels. It's for me to show you how I trade them, but what I want you to do is observe them and work out how you best trade them. I don't want to create clones of me, but I do want you to note the effectiveness of these levels going forward in real time, and I want you to note how sticky they are. Note how after price probes down through this level and then gets back above it, how it comes down again for another test and reacts absolutely perfectly to that weekly level. By the way, 10 hit the bid into that level, so you wouldn't get a fill if you did happen to bid there. Precision always looks so good when you can't see the true liquidity, right? Anyway, off it goes. Now, let's stop for a second and move back to the daily time frame. What I want to do on this daily time frame is I want to isolate another last low pre-break, which is here. And I'm now going to put that in orange, which is what I color code my daily levels in. So again, when the market moved down and it closed down through this swing low, this was the last reaction low right here. And we can refine that on the hourly if we were interested in trading it to this little swing point, which is only, I think, a tick higher. So if you've got a last low pre-break and you're looking to sell a move up into this, the level I trade at most of the time is the nearest swing low to the breakdown. That's what I call the true last low pre-break. So you'll see that this is a swing low. It's got a higher low to the left of it and a higher low to the right of it. But sometimes if we go back to the weekly, you'll see here that this wasn't a swing low. There won't always be a swing low there. And if there's no swing low, then it's going to be the very last candle that formed a low before we broke down. So hopefully you can see that there's no swing low there, but I'm still calling it a last low pre-break. So you have situations where there's no swing low, like there on the weekly, and you have situations like here on the hourly, where there is a last swing low coming in. Now, this one's particularly interesting because if there is a swing low like this, that's almost always going to be what I call the last low pre-break, unless, and this is very important, unless the last candle before the breakdown, which is this one right here, you see that shooting star? If that candle, the last candle before the breakdown, shows a very violent upside move beforehand like this, then I will refine it to that low, and that will be my last low pre-breakdown. But the question really here is, do we short the market at this level here? Now, it's not a bad level, it's just less than optimal, because as price is moving higher, it's really taking out key structure on the daily. And by key structure, I'm principally concerned with this level here. You see the flip here between support and resistance? That's actually very pivotal on the daily. as a key low. So price is coming aggressively off a weekly, taking out structure on the hourly. And for me, it's just too aggressive to stand in front of this, even though ordinarily that's typically a price point that I would look to trade. So I would stand aside, but could you frame a trade around that down on the 5-minute time frame? Well, let's come down to the 5-minute time frame and have a look when it first came into this level here. It would be fine to trade at 82s. If you wanted this trade, you could put a stop above the thrust candle. Again, using that thrust candle principle, you whack your stop, tick beyond it. Let's just put that in yellow for now. So you could enter here, put a stop there, but I think your target really is going to be coming in around here. It's just not worth it, because this little high here on the 5-minute, if we come back to that hourly, is the very low end of the range, and that's the first area when it's steamrolling higher that it might have a problem getting back down beneath. So you could sell 82s, you could put a stop at 90s, would give you an 8-tick stop, but you've got this first problem at 77s. You've got a target of 5. 5 divided by 8 is 0.63R. I mean, basically there's not enough room to play for. But have a look what happens. It trades into it again to the tick precision. It hits 82s, it goes straight back to 77, it even goes a little bit lower before steamrolling higher on the next leg. But you can once again see when you're refining these last high and last low pre-breaks, you can get some absolutely perfect entries. Who wants to hazard a guess though whether you'd have actually got that entry if you'd have been offered 82s? Of course you fucking wouldn't. 16 traded. Come on. Wake up at the back there. You've seen this issue with fills off levels 3 times in a row already in tonight's webinar. Now you might start going, well, hang on a minute. So if I'm trading this way, should I just front run my levels by a tick or so? Which brings me on to another point. That's where your journal comes in. You've got to look at past trades and reassess them in light of doing that. Because on a scalping strategy, or a very short-term strategy, if you front run your levels by a tick, that means that you've got a tick worse entry and a tick worse stop. And stuff like that can really fuck with an edge. So you've got to do the stats. I mean, that's hard work, but it's better than guesswork. So again, we move back to the hourly. So we move through that level, back up to the weekly, the last low pre-break on the weekly, and it does probe it a little bit, and then you can see the pullback here. Let me take some of these levels off because I've got quite a lot of levels on the chart. So again, we've gone from one weekly to the next and reacted very nicely off of both of them. When we trade up to this weekly, just note how we take out the rejection highs, just probe through them and then come off and start to pull back. Now this is key. If you get a last low pre-break on a higher time frame, like I analyzed here, it's a daily level. We said it was coming in here at 79s, and I just slightly refined it higher to this low, which is what I do. If you get a decent last low pre-break on a higher time frame and we steamroll through it like this, then that price point is extremely effective to key off from the other side. Extremely effective. Look at the pullback here to the tick. You know the story here already, only 44 traded, sorry you didn't get a fill. And then from there, it's back up to attack the weekly, through the weekly, and then look at the precision again from the other side. Once it clears it, once it closes through it, retests it from the other side, and we're off to the races again. So now you know that SR is key to me. But there is a real skill in knowing which levels to trade at, because there's SR all over the fucking place. You could draw lines non-stop. You know, if you drew every SR point on the chart, you'd have more fucking lines than James Belushi's coffee table. So you've got to be aware that there is SR everywhere, and we're only focusing on the very, very key structure. And then even with that key structure, not all of that is going to give you a trade. But those are the points that we're absolutely going to focus on. So we've now gone over a little bit about where price has been and what it's been doing and how I read it off the levels. Let's move on to thinking about tomorrow and making a plan for what we might do. I'm not coming in bullish tomorrow, not when it's gone absolutely fucking parabolic for 2 days in a row. But at the same time, I don't want to come in bearish either. I could see a lot of eventualities here. I could see a pullback to test this weekly level from above. I could see a continuation higher to test this swing high up here. But I'm always looking at the higher time frames for a bias. And a bias is, am I biased towards one side of the market, be it long or short? And the simple answer to that, looking at Boone right now, is no. I'm not biased to the long or short. And I'm really coming into tomorrow with no expectations regarding how we're closing here on the daily. Now, some people might say, well, you're shit. I see something even if you don't. I follow fucking Tixlayer 977's analysis, and if I follow his fucking model, this should go up here. Well, look, that's all good. If you've got a bias, then the play for you is how to get into it. I personally think that there'll be clearer biases in other markets, but you've got to execute your plan. There's a process to becoming a highly effective trader, and the process will be a little bit different for everyone, but I think there are key parts of the process that you should be thinking about. And I'm just going to flash a few things on the screen. I'm not going to go over these in too much detail, but as an example, writing a trading plan. You write a trading plan that covers everything about your trading, from your mission statement to your strengths and weaknesses, with plans on how you're going to capitalize on strengths and combat weaknesses. It will cover your commitment of funds, how much money you're putting down with a broker. And it's like a full-on business plan. This is a very early example of mine. I'm not going to go through it now, but I can do it another time. But it also covers your goals. It covers the markets that you plan to trade, how you're going to manage risk. It will cover the setups you trade, what you want to see, where you want to see it, when you want to see it. It will cover the routine you follow each day, and it will cover a lot more. Mine is 27 pages long. It's nearly 5,000 words. From there, once you've written the plan, something that it's very, very good to do is drawing a flowchart of your setup, which massively helps with fast forecasting. I first did mine over a decade ago, and I see quite a few people picking up on this idea these days, and that's great. I mean, here's a very, very zoomed out version of one of my early ones. So I can work through in a logical, systematic fashion. If I see this, I know what to do next. And then from there, the next stage in the process is taking the trades, entering them into a journal of your choice so that you can begin to collect stats on your performance and come up with ways to increase edge. And whilst doing that, a big part of a profitable trader's process is, of course, working to overcome the mistakes that you're going to make. You can use a tool like the Demon Finder, which I've presented many, many times before. And then, of course, something that's very important to do is end the week with a proper debrief. And this is the one that I've posted to Twitter before. It's all about improvement, all about analysing what you've done and constantly improving. That's a proper process. Now, I don't know if everyone that comes to me with a problem in their trading has a process like this. I suspect they don't. A fella popped up on my timeline last night and he said he'd done his arse badly. He said 3 months' work was down the drain. He wasn't a student of mine, but he said, I know I've got an overtrading problem and I'm aware of it, but I'm ignoring it. Really, really interesting thing to say. I'm aware of it, but I'm ignoring it. If you're ignoring the problem, then the process is fucked, because the process demands you acknowledge the problem and fix it. Anyway, this person goes on to say, and I quote, I've got a model, but I can't follow it. All happens in one day. I go on tilt and it's gone. And honestly, I hear this time and time and time and time again. But it's like I've said before on Twitter, so many traders, they see a great setup go wrong, or they make a mistake, and suddenly they just compound a loss by becoming very frustrated and just suddenly taking a really ill thought out trade, a really shit trade, or they're betting way too big, or just making a myriad of other mistakes. And, you know, I always like to say, look, if you have a flat tire, you don't get out the car and slash the other three like a cunt. You need to be able to have the discipline to stand down. Look, as if it isn't hard enough to perfectly time your entry with a stop that can't be picked off and a fucking target that's actually got a chance of being hit. And then you've got to try and hold on to the thing while it tries its best to throw you off. And if you've somehow managed to make a plan for all that and you're confident in your model and you're telling me you don't have the discipline to trade it, you've really got to sort it out, or you've just got to bow out the game to the next person that can actually act like a fucking professional. And I know some of you are thinking, oh, these problems are really hard to overcome, man. You sound like a right cunt just saying sort it out. But that's what my mentor said to me when I said to him back in the day, I can't do this shit anymore. He said to me, well done for trying, Tom. You're not cut out for trading. And that was all I needed to hear to say, I'll fucking show you who's cut out for trading. So, because it was so effective for me, that's why I talk to other people like that. It's tough love around here. Anyway, moving on from that, back to the plan. So I said I'm neutral on the weekly. I said I'm neutral on the daily for Bund. I haven't really got any expectations yet. That might change when we open tomorrow because price develops and so does our response to it. There are a couple of areas that I do actually like, but they're a fairly long way away from price. I will point them out for you. The first one is all the way up here. So again, I told you this is a long way away from price. It's actually possible that we could hit that. It's a typical area that I will trade, but some of you will be looking at that thinking, fuck me, that's a long way away. But I'll tell you the reason I like that is it's a spike base. When you get a rejection candle with a long wick, when price returns to the low of that candle, you'll often get a really decent reaction. What's particularly nice about that is it comes after these highs up here. So you've got all the potential to see the market go up, test this area, trigger stops through there, and we'll try and get short. Obviously, I'll come down and I'll refine it on the 5 minute. I'll do that tomorrow because we're not fucking going up there tonight. But that's the first area down on the hourly that I like the look of. Another area I like, which is actually this time below market, is back down here at the 66s. What I would do is I'll just now refine that slightly to this little high, and that's at 67s. But that area there is very pivotal. We know it's pivotal because it's color coded orange, which means it's a daily level. So it is a higher time frame level and it hasn't been retested. It's naked, unlike this level here that has been retested. And from a market profile perspective, you will see that in this current week here, it's 4 ticks ahead of the single prints. Now again, I'm not coming down to work out exactly where to get in because we won't be getting near either of those levels until tomorrow, so there's plenty of time. But when I make a plan in the evening, I use this. So this is the key news, not absolutely everything, but the key news from the calendar that's going to be in play tomorrow. You can see that I've got a weekly bias that's neutral, a daily bias that's neutral. No real expectations for the day, but the key levels on the buy and sell side and why I like them. So the 33.67s down here, it would be past ATR, something I'll talk more about tomorrow, but for those that know me, they know that I love mean reversion trades. So when the market goes past its average true range and it trades into a very good level, I'll be willing to step in front of it. So it would be past ATR if we traded there, and of course you've got the single prints 4 ticks below. And then at 35.33 we've got the spike base that I've just pointed out. Again, that would be past ATR and you've got the nice potential for a trap. The development box isn't filled in because this will be filled in during the day. As we see what price does, plans might change. The good thing about having a plan like this, and the reason why I think this is a very important part of your process, is because what a lot of people do is they do make a plan at the beginning of the day. Then they get to the end of the day and you look at what they actually did and it was nothing like what their fucking plan was. I've seen people coming into the day saying they're super bearish. To get to the end of the day, they've been fucking buying it all day. So The key here is to make a plan before the day begins, and then you can write in your developments. And then when we get to the end of the day, in this box here, what happened, you can look and you can see how did price develop and how did that affect my initial plan. Maybe, based on the developments, I decided to pull one of these orders if price trades into it. And at the end of the day, we'd assess, was that the right thing to do? Was that the wrong thing to do? It's always about analysing what you did and then developing it going forward. So that really allows you to see what developed in price that might have made you change your initial plan, because price is always advertising with its movement, and it will do things that can totally shift your bias right out of the blue. When you're fairly new to trading, or even if you're not new, even if you've been doing this years and years, but you haven't got an absolute concrete strategy and you don't know it inside out, back to front, your whole plan can shift on the fly. You were coming in planning to buy the thing, and suddenly, just because it breaks a key swing low and maybe closes through it, suddenly you're like, oh, that shit's off, I've got to be a seller. And again, you won't know until you've taken the trade whether you were right or wrong, but this will allow you to see what was I influenced by in price when it was developing. And then, of course, concluding the day. What did you do well? What did you do poorly? Why? To both of those questions, and how can you improve? So there is, as I've always said, a process. And again, the trading plan that you write is transitioning into your daily plan that you have of what you're looking to do on a given day. So again, what you'll see here is that for me right now, there is no bias, but many times you will see that I will come in and say I'm actually biased. In any market, it might be gold, it could be Bitcoin, it could be whatever. I'll come in the night before and say, oh, I think there's going to be a big move tomorrow, let's say to the upside, and I just want to get in at this level here. But when I'm looking at Bund, I can't see that, and I think it's good that I can't see it for the sake of this session for you guys, because it shows you that you can come in neutral and we'll see what develops tomorrow. Although we have got some ideas of, if price goes up here, I'm definitely looking for a sell. Price comes down here, I'm definitely looking for a buy. I'm not sure either of those two things will happen. They are quite far away from price, but I already know that there's no fucking about. If price comes into one of those levels, I got to trade it, because that's my edge. So I will leave it there for tonight. I'll see you in the morning.